Trading has closed on the 7th of December 2022. Our disclaimer always comes first. It's my trading plan for tomorrow, December 8th, 2022. Please remember my calls can be wrong and any trade you make should be at your own risk. Look for the pattern with the early low, which is this. Tomorrow should have the early high. We had some higher targets. We said they might fail. And we also reminded people that we gapped down smartly, which is what happened, that the calls killed before they open. So unless we gap down smartly, they should print. So the targets remain, but the gap down means there was no call for today. During the day, MEJT said this rally was false, would retrace, said this drop was false, would retrace, said this drop was false, would retrace, and it did. That's all played out. We gapped down, hit a lower low, closed over all the lows. It's a bullish pattern if it can be maintained at tomorrow's open. If we don't gap down smartly, we should see higher prices. This is a straight down day. It's followed by an inside day. According to Larry Williams' work, means the drop has run out of steam. Tomorrow should trade up. I don't know what the count is. This certainly isn't the only one, but this looks like a third of a third wave to me. Not many other waves look like that. So if that's the right count, we have 1, 2, 3, 4, 5 to complete wave 3 of 5 down. And wave 5 of 3 counts as an ending diagonal triangle. We don't know if that's the right count, but if it is the right count, we should rally pretty much from the open. And if we don't rally pretty much from the open, ideally by gapping up, I'd be suspicious this is the wrong idea. As far as how high we can go, wouldn't be surprising to have a fib retracement of this whole thing. 61.8% of this is at around 39.88. 38.2 is at 40.30. So if that's the right idea, you could have a pretty strong rally here and not change the general negative picture. This validates yesterday's breakdown. We should go around 225 points under this line. And if it's a rising wedge, which is what I'm calling it, that low is going to fall. So we have much, much lower targets, and people who don't like to play every little wiggle can stay short, but you have to be prepared that we could rally back up to this line, which in my experience is what usually happens when you have a straight line break through an upsloping trend line. So you have to be psychologically prepared to sit through a pretty strong move higher, but I think if you do, you'll be well rewarded before you're done. Doesn't make me right. Well, tomorrow's pattern has the early high. Doesn't mean you won't gap down. Today's action confirmed yesterday's break lower, implying a substantial drop is coming, but that doesn't require us to drop tomorrow. We gapped down, hit a lower low, but closed over intraday lows. If maintained at tomorrow's open, it should lead to higher prices. Yesterday's straight down day was followed by an inside day today. Larry Williams' rules say tomorrow should be a rally day. The wave count I'm using is also bullish, if it's right, and of course we don't know that. We should rally pretty much right from the open. Futures are down 10 handles as I write this, so the call could fail, but economic reports due before tomorrow's open could change the picture. Frankly, if we're not in rally mode right from the word go, I don't know if I would take a counter trend trade, but that's what I'm expecting. As always, we gap down smartly. The call is killed before the open. So there's a good chance for a reflex rally, which could be a strong one. We have these higher targets. They don't have to print right now, but that doesn't mean they won't. And after what could be a strong rally, we're looking for pretty much a collapse. And if I'm right, a rally right from the open, and certainly that low is going to hold. So we'll see what tomorrow brings. We have economic reports coming out. It's the pattern with the early high, and that is today's call.